Short exercise 1-16, we're going to calculate return on assets, which attempts to measure how efficiently a company is using its assets to generate net income, also called profit. So a net irrigation company has net income for the month of October of $30,000. Assets as of the beginning and the end of the month totaled $355,000 and $345,000 respectively. Calculate a net irrigation company's return on assets, ROA is the abbreviation for that, for the month of October. Enter the ROA as a percent, rounded to the nearest hundredth of a percent, so to 2 decimals. Do not enter the percent symbol into the input field. So our first task here is to enter the formula for ROA, for return on assets, in words. So do you remember the formula of return on assets? So here's kind of a clue about how to figure it out. So return, notice it says return on assets. The return is on top, the numerator. What does the owner get in return for having business? So that is net income. So net income will come first here. It will be on top. And then it's a return on what? A return on assets. So we use the average total assets in this case. So the change of assets throughout the year, or in this case, just through the month. So then we're going to go ahead and plug the numbers in. So our net income for the month of October was $30,000. So we'll go ahead and enter that in here for the net income. And then we're going to need average total assets. So in order to get that, we're going to need our calculator. And to get an average of these two numbers, because we have the beginning of the month is that 355,000, end of the month was 345,000. So we're going to need the average of those two for October. So we'll go ahead and add 355,000 to 345,000, and then we're going to divide that number by 2 to get the average, and that is 350,000. So we'll go ahead and click in the cell and enter our answer there for the average total assets. So then we need to do the math to get the return on assets. So we'll go ahead and clear our calculator if we haven't already, and enter the 30,000 in net income, and then divide that by the 350,000 average total assets. And that is going to give us 0.0857, and if we want to turn that into a percent, we can multiply that by 100 here, and that's going to give us 8.57%, and we are sticking to those first two digits since the third digit here is a 1, so we are rounding there down to 8.57%, and that is to those 2 decimal places that they have requested we do that. And again, we converted this to a percent because they have the percent symbol here. So what does that mean? So notice the formula is net income on top, in other words, profit, divided by assets. So for every dollar of the thing on the bottom, so in other words, for every dollar of the denominator of assets, they generate $8.57. So in other words, for every dollar of assets, the company generates $8.57 of net income, also called profit, for every dollar of assets. Is that good or bad? Well, it depends on the industry the company is in. So you have to compare this company's return on assets versus other companies' return on assets in the same industry, because different industries have different levels of assets and different levels of profitability. So let's go ahead and check our answer. Good job.